and this has all led to a massive surge in terms of the open interest positions and also in the sugar prices. So let's ask from our guest. So joining us to discuss this rise in sugar prices is Naveen Mathur from Angel Broking. He's the Associate Director, Commodities and Currencies. So Mr. Naveen, good morning. So my first question to you would be, what are sugar prices incorporating at present? As we know, the global forecast from a lot of analysts on the street is for a 4 million ton deficit or 11 million ton deficit. Roughly the range is between that. So at present, the sugar prices are incorporating around 4 or around 11 million ton.
I think they're talking about 4 and 11, what you rightly said, Piyush. But I think overall the market remains to be on the deficit mode. I think it would be somewhere near between around 6 to 8 million deficit, not largely, which has been discounted in the prices. If you see in India, the prices have fallen down, that largely because of the discount factor. And also, Piyush, if you see, the government has taken stringent actions to see the highs which we have seen over the last few months. Actually, in April, the price got arrested. We did saw 6-year lows of sugar in July last year. But at this particular moment, I think the prices are hovering around 3,400 levels on the MCX. They are 18-month high, although, but they have come down drastically. Because the discount factor. See, honestly, you do have a production deficit this year, but the carryover stocks also, Piyush, are quite significant. So I think largely the sugar may not be going up, and the government taking action would somehow take the prices on the down one, and that's what we have seen from March 3,600 levels to currently around 3,300 levels.
I think one very interesting point you're making is that there is a good carryover stock here, and that is what is baffling. So I think for the viewers, it would be very important to know that government has downgraded the forecast, but the forecast is around 23 to 24 million ton for the next year, and also we have about 7 million ton as carryover stock, as you're saying. So if we total that, it's coming around 31 million ton. Demand is roughly around 25-26 million ton. So on the paper, it appears that we still have a lot of sugar supply there. So what is the gap here? What are the traders basically betting on? Is that the market is not actually going to get much sugar?
Piyush, the markets have been volatile. Now, if I go a little past, the government has asked the sugar companies to export approximately 3.2 million tons because of this supply glut. We are seeing estimation of around 25 million for this marketing year, which is 2015-16 October to September, versus 28.5 earlier. Yes, the demand is definitely low versus the supply, the production plus the carryover stocks estimation. I think going forward with festival season coming in, we may see a perk up in medium terms in November, October, September times when the festival season actually starts off. We see little perk on the prices and demand goes little high, but I don't think so the prices would be too volatile to touch 4,000 levels, what the market rumors have been. I think the prices have discounted in the deficit, they have discounted in the carryover stocks, they have also discounted in all that factors which you said at the start of the session itself. So I think overall it would be a bearish trend for some time, but maybe in a medium term from September or late August onwards, prices may perk up a little, but not to a high levels.
I think, yeah, your statement, I think, would not please the bulls. But nevertheless, one more thing I would like to ask is that how are you seeing the retail price trend at present? Because in some regions, the prices are already around 40 rupees per kg. And if we adjust for the 40% import duty which the government levies on the imported sugar, the prices for the imported sugar could be somewhere around 45 rupees. So do you think the retail prices on the ground could actually move higher, or it will be very hard for the price to increase?
Piyush, the retail prices are inclusive of all the chain, the value chain costs. So that is still a little bit unorganized, that is still a little bit opaque. But what my feeling is, the 40 rupee price, not the imported one, but the domestic one prices you are seeing in retail, if the production, if the estimates are right, I think the prices may touch 3,200 levels also per quintal. So if that prices go down by another 3 or 4 rupees per quintal, means 100 or 200 rupees per quintal, I think we're gonna see that effect on the retail prices also per kg. And from 40 rupees, I am expecting the prices in June and July somewhere near say around 37 to 38 rupees. 2 rupees fall from there on a kg for the retail prices. But overall trend, as I said, on the medium term, may be slightly bullish because of the festival season, but a short and intermediate term definitely seems to be bearish.
Okay, so then let's talk about the Brazil. So the latest development we have been hearing is that the harvest season basically has moved slightly earlier. In the central and southern Brazil, we are hearing that perhaps the new crop could come as early as July. So do you think that the market is now factoring in there, and is the crop cultivation going to be significant enough to actually make the traders shed their open interest? Because what is driving the price right now is more about where the hot money in trading is going on.
Piyush, 33.5 to 35 million ton is what the output from the Brazil is supposed to be an estimated at, up from approximately 31.2 million tons last year. So I think that particular factor is also playing a critical role in the in India. Since I said the carryover stocks would be high, even the production deficit would not make up the demand constraints, and therefore the demand would continue to be low at this particular point of time. I think Brazil being the largest producer, India being the second largest, I think the Brazil factor is crucial, and that is what is expecting the trend to be, that the supply would be approximately 33.5 to 25 million tons versus 31.2 the last year. So I think it's all said and done, slightly bearish from here, but over a course of time from August and September may take a little bit on the upside just because of the festival demand, and that's it.
So Mr. Mathur, as you have already saying that it looks bearish at present in terms of the strategy, would actually be any depreciation in the Brazilian real currency can actually affect the strategy or your outlook? Because if the real depreciates, it actually becomes slightly unattractive for the Brazilian producers to send out the sugar out in the world market. So, and we know the real has been quite volatile. So is that a very important factor at present?
Yes, definitely. The real has been depreciating from last, I would not say months, but at least last 1 year or so. The reasons are political. The reasons are the economy. The economy is not doing well. There is an unemployment, and the double-digit GDP contractions which are expected for this particular country. There are political issues which are largely affecting the currency there too. So I think real has depreciated and it's been discounted. And I think, if I'm not mistaken, it's around 60 to 70%. It's already being depreciated this year. And this year means the last calendar year. So I think overall factors have been discounted, and we don't see too much of depreciation in real from here, at least what I understand, because the kind of volatile the currency it was a few months back, it has somehow stabilized. So that particular factor also, Piyush, has been taken care of, or it has been somehow being little stable over a period of time. And I think it must have been discounted in over a period of time with the factor of Brazil production versus the last year and the government actions in India.
Okay, so time for a short break. On the other side, we continue our conversation with Naveen on the rising sugar prices and the government's measures to curb the price rise. Welcome back. You're watching Bottomline. So Mr. Mathur, let's continue our conversation on the sugar. And now the next very important thing is that prices have increased. And as we know, sugar is a politically sensitive commodity. As the prices start moving up, it invariably catches the attention of government. Now we have an import duty of about 40%, which also protects the domestic industry. Do you think if there is any reduction in the import duty or a change in import duty, it could actually push the prices down and also basically act as a deterrent for the imports?
Absolutely. You're rightly pointing out when we saw the prices zooming up on the upside from 3,300 or sub 6-year lows last year to a highs of approximately 3,600 levels in the month of March. I think the overall intention of the government was to see to it that the prices do not move up, and they've taken the corrective steps. They have taken up the prices. Actually, the compulsory export for 3.2 million tons can also be looked into again. The 40% tax on the import duty can also be looked into again. So I think the overall factors therefore are dependent upon how the prices or how the production and the consumption pattern emerges from these scenarios. Overall, the government, Piyush, if you remember, has been very prompt. The government has taken actions. Even if you see the inflation figures, in spite of being the drought of last 2 years, the government has been very, very proactive last year. So I think the government has all the tools to indicate or to ensure that the prices are within actually a reasonable range, and no malpractices actually go in, because being a sensitive commodity and an essential commodity too. So I think the government has all the tools, and I think the power of the government to curb the rise of the prices has been effective, and therefore the prices have come down drastically.
Right. So I think you have spent years and you have seen very different commodity cycles. So in terms of the sugar cycles, and if you look at what is happening in Brazil at present, the first half has been very good, and it's expected, and rather I was reading that it appears that the millers, they have doubled their sugar processing in the first half of this year. So what do you think, how long, or what's the cycle duration actually for the sugar return? So at present the prices are low, the cultivation is on the lower side. 1 or 2 years back we were seeing a water shortage in Brazil, so there was a sugar crop downfall there, a slightly shortage there. So what do you think, how long the sugar cycle actually can last this year?
See, if you remember, over the last 7 to 8 years, as I correctly recollect, there was a glut earlier. Then we had the production cycle being on the higher side. The prices came down drastically. So it moves in a cycle of deficit and a production surplus. So I think from here onwards, I don't see too much of the pain to be continuing. It's a cycle where the markets have come down. They have discounted in the prices. They have discounted in the measures. They have discounted in the demand and supply situation. But overall, the factors still remain to be bearish till an extent in India for approximately 3,100 rupees for a quintal. I don't see too much of a downside from there. It's a cycle which comes every second or third year. So I think overall, during the course of time, being the seasonal cycle, these kind of prices, the price volatility which we in sugar will gonna continue for some more time. But overall, the price trends may remain subtle between 3,200 in India for the downside, currently at 3,300 levels, to approximately 34 to 34 and a half in a medium term on the upside.
So that's actually very interesting, and if I'm reading it rightly, it also means that you are actually in a way, if actually viewers are taking cues from what you're saying, and if they're long, actually they should be booking profits or should turn very cautious on how the next 6 to 9 months are going to shape up. Is that a right assumption?
Absolutely.
Sure.
Absolutely, Piyush.
Sure. So I think one more interesting...
Be cautious on the trade for the sugar being a volatile commodity as of now.
Absolutely. So I think one interesting point is that what are you thinking about the sugarcane outlook? Because one thing which was very baffling for me, if there is a drought, if the sugarcane farmers are facing hardships, and because of that the sugar crop has been downgraded in terms of the production estimates, do you think that the import of the sugar will be a necessity for the government, or we have ample stockpile at present?
We have ample stocks. We have ample stocks. We already talked about the demand and supply situation. If we go around 25 plus 7 to 8, actually 9 million tons of carryover, it becomes 32, 33 million tons versus a demand of approximately 30 million tons. So we anyway have the surplus. The only point is the monsoon is expected, Piyush, to be on the good side. We have 2 years of drought. 6% on the LTA as predicted in the earlier forecast by the IMD. So I think, yes, there were concerns in Maharashtra because of the drought, but then since that's been taken care of with the estimates coming out from IMD, month back, 106% of the LTA and well distributed to rainfall and monsoon this year, I think the prices may not be going too much on the high, and therefore we are seeing even the downtrend continuing for some medium term.
Sure. So I think so last question, since you have with us and you know agri commodities very well, could you actually pick any of the agri commodity which you are liking at present, and viewers actually could get interested in that?
I think the refined soya seed or the sugar itself, which we are talking about, seems to be a good, but then it's an essential commodity. I would remain cautious not to trade onto of the volatility in the markets, and being an essential commodity, let the hedgers and the participation of the people should be part of it. But then sugar and the refined soya RSO can be two of the commodities which one can look into nicely.
Thanks, Mr. Mathur, for your insight. With that, it's a wrap on the bottom line. Thanks for watching. We will be back with the top stories on the other side.